If you look at what's going on with the financing behind these large tech companies and their build out of data centers and how they're financing it, a lot of it is being financed behind the scenes with special purpose vehicles where the debt doesn't show up in the normal kind of way, right? How this works, instead of the company borrowing money directly, they create a separate legal shell called the SPV to take on the debt. The dark element of this is this company is often funded by private credit funds rather than public banks. Private credit is a dark market because these loans don't have the same disclosure requirements as bank loans. The danger of this is if AI revenue doesn't show up to pay for these $100 billion data centers, the special purpose loans basically could collapse. Because they are interconnected with the main companies through rent agreements, a failure in the dark SPV market could pull down the main stock market. And in the world of DeFi, you have a line between traditional finance, TradeFi, and crypto, DeFi. It's been blurred, creating a new type of unregulated market. Tokenized real world assets, companies are now tokenizing corporate debt and real estate on blockchains. While this adds speed, it often happens on offshore protocols that U.S. regulators like the SEC or the Commodities Exchange, uh, I believe that's what it stands for, CFTC, cannot monitor in real time. The rehypothecation loop, just like in '08. Crypto dark markets allow users to use one piece of debt as collateral for another loan, then use that loan to buy more AI chips or Bitcoin. This scenario highlights the core systemic risk within decentralized finance, DeFi, often described as the decentralization illusion. While the transactions are decentralized, the high concentration of capital among a few key liquidity providers and the automated rapid execution of smart contracts can lead to a systemic failure. The lightning fast cascade mechanism, automatic liquidation and lack of circuit breakers. Unlike traditional finance, which can halt trading, DeFi protocols use smart contracts to liquidate under collateralized positions immediately. If a large entity fails, the automatic sale of their collateral causes a price drop, which triggers further liquidations in a cascade that can occur within minutes. Why human regulators cannot stop it, irreversible, basically. Once a smart contract transition is confirmed, it is irreversible. No central counterparty circuit breaker like you do have in the stock market. There is no central bank to step in as a lender of last resort or to halt trading. Latency, the entire cascade from the initial failure to the liquidation of positions can happen faster than a human regulator can even identify the problem, let alone act. So, there's similarities between what happened in '08. Nobody was paying attention, right? So the idiocy that critics point to in 2026 is that we are repeating the exact same mistake. Born is actually a person that would try to warn everybody back in '08, tried to fix. She tried to report it, and she tried to fix it by reporting it. We are allowing the biggest parts of the economy, AI and crypto, to fund themselves through private, dark channels where no one knows the true amount of leverage that is being used until something breaks, and by that time it's really too late. Anyway, if I can research in this and find out this information, you guys should be able to do it too. I use basically Gemini to do this, and I'm telling you, the warning signs are there because they're doing these dark channels, these weird special purpose vehicle loans and stuff like that they can't track it in DeFi where they can't really track things. So if the system collapse, if one part of it collapse, it could be like a set of dominoes that's collapsing over time. Anyway, that's the risk to the AI structure that I see as far as like how they're doing the financing behind the scenes. And if there's no payout at the end of the road, if they don't make money on these data centers, then you could have a collapse of all these SPV funded loans, and everything's kind of interconnected on some level. You know, there's institutions behind the scenes that are connected to these SPV loans and stuff like that. All right, guys, be careful out there. There's something I thought I'd bring up regarding AI and DeFi. Take care.